How's it going, guys? Welcome back to another video. So today's video is going to be a trade breakdown and just a trade breakdown of what happened today. A few disclaimers. I have been starting to change my strategy just a little bit, mostly on the entry part and the stop loss part. Other than that, everything is pretty much normal as you guys would know it. If you are in my Discord, I would suggest going over the model again, as that's been updated a little bit. Another disclaimer with that though is I kind of go back and forth. So you'll hear people say just don't switch strategies, which I do completely 100% agree. You should stick to what you know and what you feel comfortable trading 100%. And for me, there's two things I like to do during my entries. As you guys just know, there's the OTE, right? From the swing low, swing high, or swing high, swing low of that range. The OT is one big one, but there's also fair value gaps. Okay, because these fair value gaps, as you can notice, get filled in very specific events where price fills them and then shoots back up or shoots back down in a certain way. And I've noticed that throughout the years of trading. And to be honest, that is mostly what I prefer entering off of. Okay, so let's get a trade recap real quick. Let's go over some news. Let's go over what happened today. And actually, before we do that, I do want to highlight a comment that I just got on my YouTube. If you guys have not checked out my previous video, it was about 40 minutes. I don't expect you guys to watch the whole thing. It's really no big deal. But basically, it was the trade from yesterday, which I believe was somewhere around, where was it? It was this candle or something. I can't. Where was it? Pretty sure it was this over here. Okay. And the the trade comment was it ran up and hit a 1 hour supply zone. So that's the comment I got. What he's referring to is, I'm pretty sure wait, do I have this? Give me one sec. I gotta look into my charts. I'm trying to remember what he's talking about. Okay, I think he's talking about this. Talking about this. Pretty sure we're talking about this this tap right here, which was right here. So he's talking about a 1 hour supply zone. The only problem is when we go to, let's just mark this so we don't get lost, so I know exactly what's gonna happen. When we go to the 1 hour, unless he's trading something else, I don't see. First of all, I don't even trade supply and demand, and I'm pretty sure supply is at the top. And supply is usually it looks like an order block, so it's the candle before the big down move or the big move up. But the supply is always on the down move. So I'm suggesting that he's referring to, like, even on the 1 hour, I don't see anything that suggests supply at all. At all. Nothing. There's nothing. So, Don Oliver, if you would like to comment what you're seeing, or maybe I have a better idea. If you're watching this video right now, Don Oliver, I would like you to join my free Discord, which is in the link, in the description, or it should be on my profile. Go into general or go into charts and post your chart and explain what you saw, because I'm interested into seeing what you're seeing. Okay, because I have my own eyes, but maybe I could learn a thing or two from you or someone else, right? So please be sure to join. It's completely free. And a little disclaimer, it probably won't be free in a month or so. We are planning to make it a paid course where you get some free essentials, but then some of the premium content will be live trading, live call outs, stuff like that will be mostly paid content. So if you guys are looking to get into that pretty early, I would recommend getting into Discord now than later. Okay, so without further ado, let's actually jump into the news first, and let's take a look at the news here. Let's pull up this. There we go. So today was Thursday, obviously. Okay. We had at 8:15, we had ADP non-farm employment change. So it turned out to be bullish here. So the forecast is 120. The actual was 164K. So that's a big slippage. Actual is greater than forecast. So yes, it is, which means it's good for currency, which means that we saw DXY rise and we then saw SPX dump. Okay. Now, just for a little indication of what's going on, we had this 4-hour sell side liquidity, this low, this swing low, kind of like a low hanging fruit. And with my experience, I knew that when we rejected this level, whatever it was, when we rejected it, oh no, this was it was FOMC, well, FOMC minutes. So FOMC minutes happened here. 2 p.m. Hence why we rejected. I know why this happened. It wasn't no 1 hour supply zone. Came down. Okay, so hard rejection. Came down, created that sell side liquidity. So I knew that we would want to take this out even, when our bias was down here on that daily for value gap. We were so close. So I knew that was a low hanging fruit. I know that price wanted to hit at some kind of liquidity. And this is also a high time frame liquidity. So anything with high time frame, I like, right? It enables our strategy to start working, and that's exactly what we look for. So with that being said, we had bearish news. Let's drop down to the 5-minute just so we can see this price action just a little better. 8:15, where's 8:15? Right around here. So 8:15, we get ADP right here. Bearish news, you can see, boom, kind of straight down. It's not a candle down, it's a multiple candles over down, and we almost get to that low right there, as you can see. And then I'm pretty sure we get news again at 8:30. That's right, 8:30 unemployment claims, and this is what forecast 217, and the actual was 202. Actual less than forecast is also good for currency. So guess what? This was also good for currency, so also good for DXY, which means it's bad for SPX. And as you can expect it went down. But 8:30, where's 8:30? Right here. Okay, well, there it is. So 8:15 down, ADP, and then unemployment claims down again. So there you go. Those two candles, boom, boom, comes down, gets bought up a little bit. As you can see, this is pre-market, so we have not opened quite yet. We have that sell side liquidity level right there, just sitting nicely for us to take out, because that wick is just so close. It's literally an inch from it. We know we're going to take that out. The question is when. Okay, and this is pretty nice because we actually come down, we sweep it, right? We sweep it at 9:25. Okay, and guess what? That is 5 minutes away from the 9:30 open. So in my head, I'm like, okay, I don't usually do this, but I can see where this is going. This is going to have a very, very strong impact on the market because it's going to go up, right? Because we just swept the liquidity. Orders are getting filled from market open, obviously. So it's going to go up. It did go up. Very, very bullish. You can see very bullish. And what actually ended up happening was a market structure shift, believe it or not, right? Believe it or not. Let me just delete the -0 here, boom, so we can mark it. So on the 5-minute, as you can see, there's not much happening, but you'll notice, and this is what I love, there's a little trend going, right? You see, it's obviously it's bearish. You can tell it's bearish, but here it's making swing highs, then swing low, swing high, swing low, but it's kind of going down. It's going down, going down, going down. All of a sudden, we hit that high time frame PD array, that high time frame sell side liquidity, which we've been waiting to hit. We finally hit it. Looks like we have nice, clean price action of sweeping. I'm guessing there was another level here because the way that these candles closed and wicked, I'm guessing there was another spot that it hit, but this is the spot I was looking for. Pretty sure if we go on the 3-minute, yes, that's what I was looking for. 3-minute also had that same kind of downtrend structure. We make that swing high, which creates that swing low. Then that swing low creates another swing high, which is lower than this one. So we're lower high, lower swing high, which is right here. I'll show you right here. Boom. Okay, lower swing high. And then that lower swing high creates that lower, or like a lower swing low, which then breaks that that swing high. So what do we call that? That's a market structure shift. Now hold on. This happened on the 3 minute, so we got to be careful because not everything you see on the lower time frames correlates to the higher time frames. Okay? So with that being said, that means that when price came and hit that 3 minute market structure shift, did we see it? The question should be, did we see it on the 5 minute? So yes and no. Okay. So yes, we did get it on that candle, but no, we didn't get it on that fully up close candle here, which would have been nice to see because then that would have worked completely. That means that the structure shift 100% happened if this 930 open fully closed above that little high right there. Now, to some traders, that might seem like nothing, but to me, that's the perfect entry model that we want to see. Now, unfortunately, we didn't get that. So I just stuck to the 3 minute, but as you notice on the 5 minute, we did close on that second candle. So that wick is basically like chopped in half and we did close above. We do have to be careful though, because it's a wick. It didn't fully close above. So we have to be careful. So now the second step is to draw the standard deviation. So before I draw any fair value gaps, I draw my OTE, my Fibonacci, my mean threshold, my consequent encroachment. Before I do any of that, I make sure that the standard deviation is lining up with engineered liquidity levels and with proper liquidity levels in general in the market. So when we have the standard deviation here, right, we go from the swing low to the swing high because it's a buy model now. Okay. So swing high or swing low to swing high, and we get our standard deviation, which lines up right here. So the -1 here, which in this trade would be risk-free. The risk-free would actually be like somewhere over here on this point, but for me, it's a -1. So -1 lines up with this liquidity here. Almost. What about this one? Okay, yeah, perfect. We'll take that one. Lines up with that one. -1.5, let's see, doesn't line up with, this? Not really. It's just there to be there. And then our main target, fully main target, was the -2.25. So the consequent encroachment, the midway of this range right here of the -2.5 and -2. Now, the main reason for this is because I knew, and I don't know how to tell you this, but I knew that price would not come up to that -4 because that's a little unrealistic for us. The problem with that is it's unrealistic because price has shown interest in going lower by sweeping this liquidity. Obviously, it does have a very nice, strong bullish move back up, but, and this is what I was scared of, was this area right here, this area. It doesn't seem like anything, but this, remember, was, let's see, 220. Yeah, so it was, this was the FOMC minutes. So this has a lot of engineered liquidity. This means if any like price comes back to that level, it will have a reaction off of it. And that's what I was scared of, okay? Now, I did mark a few order blocks. There was definitely order blocks in here. The only thing I didn't want to do was target the -4, okay? Because I had a gut feeling that it was just not worth it. And I'm finding out that, and I went back in my notes, and most of the trades that I've taken have hit the -2.5, or at least the consequent encroachment of that fair value gap that we've always been targeting. And that's the best risk to reward. I mean, just look at this trade right now. The risk to reward right now is a 6.3, or 1 to 6, or 6 to 1. I don't fucking know how to do that, but it's already good. Like you're already risk-free there, and you've determined like this, the -2.5 to -2 is the price range that most of the time price will reverse. And as you can see here, that's exactly what it did. Okay. And I've back tested this. It's pretty true. And if there is a -4, we have to see some kind of insane move up beyond these levels to actually absolutely clear it. So yes, was I expecting a move higher? Yes, sure. Was I expecting a reaction off of this? Yes, 100%. Which one do I take? Because of my bias and because of the experience I have, I would not want to target the -4 because of not only these order blocks and this liquidity up here that would be very hard to beat. It would also mean that there's, if we break these highs, another market structure shift. And I don't think price is ready to go up quite yet. As you can see, with the level of price delivery today, we are targeting this daily fair value gap, which we have marked out. Which we have marked out here. Okay. Now, am I saying we're targeting the consequent encroachment? No, that I don't know. Right now we're in free fall, and I really don't like this if we're in free fall, because like I said, if we close under this low, which we've just done, this could be very bad for SPX. This could be very, very, very bad for SPX. So that's that for the standard deviation right there. So yeah, again, we targeted that consequent encroachment. I think of it like this. I always do something like this. You'll see like some boxes on my screen. Let's see if I have a picture in the Discord that I posted. Yeah, something like this. So that was a live share right there. Yeah, so that's what it was. But you'll see me have a box like this, and I'll delete the standard deviation when we get to the level. As you can see, I hit the consequent encroachment just perfectly, beautifully right there. But let's go ahead and talk about the entry, okay? Because the trade's cool, but the entry, we want to see the entry, okay? So after the standard deviation is drawn, okay, we have this move up, we have these body wicks, we kind of wait. What we wait for, as you guys know, is a swing low is already created. The market structure shift has happened. So now all we need is a swing high to be created. Now, this isn't an external swing high to be created. We don't want a huge move up. That would be kind of not unrealistic, but it would be hard to catch back again. So what we want to do now is we want to pay attention to what's going on down here and what's going on up here. So first of all, we draw that swing high. So obviously it gets created here, boom, 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 whatever. That swing high gets created here. Okay, so my first thought, let's just go and delete this, just so we're clear on all this. So my first thought is that swing high's there. I'm going to draw my Fibonacci tool. I'm going to get into here. I'm going to draw my OTE. I'm going to drag this out a little bit. Okay. Right here. Okay. Now, currently, that's the swing high that's working for us. That's the swing high that is like, okay, it's there, it's created, it's done on that candle. And this is where it happens fast, man. This is where you got to be on top of your game. And this is where it's a little hard for options because, and for me, I can't call this out live while I'm trying to set everything up. So unfortunately, some of my call outs will be late, but the entry would be normal, right? So unfortunately, you guys can't follow up with live, but that's why I'm making it where in a month or so, we'd have a live trading when you buy premium. We'd have a live trading and you could see me do this and I'd probably call it out live if you're listening. Oh, hey, I'm taking this long here. You should do the same when I see this pattern, form or whatever. So that's that. So what do we notice? The OT is telling us, or first of all, the discount area is here. So when we draw our, shit. Oh, fuck. What the hell? What the fuck? Okay, this is not working. The discount is under here, or the premium, whatever you want to call it. So you can start buying when we're under this. Perfect. What do I see on the 3-minute where I don't even need an OT? What do I clearly just see right here? This 3-minute has created such an imbalance because of that 930 opening that I can see there's a fair value gap here. And that's going to be my point of interest, my POI point of interest. And as you can see, this is where I entered. I like to target the consequent encroachment. So some people might want to see this fully swept. Okay. To me, that seems a little bit unrealistic. Here's why. Because if price does fully want to come down here, it has enough power to come down. So it probably has enough power to come down even more and take this wick all the way out. Now, sweeping this internal fair value gap would be good. But if it only comes to the consequent encroachment, it makes a perfect entry for not only us, but it also shows that if it can't go lower, what does it want to do? Go higher. So this is telling us in itself that this price action is extremely bullish. So once you're in and you see this kind of bullish candle close like that and not even want to trade any lower, you know you're in the trade. You know you're in the good trade. Okay, that's just my thought process. Now, if this were to sweep, again, I would be in my consequent encroachment. I would still be in the trade. Yes, I'd be in drawdown for a few seconds, but you'll know where my my stop loss is down here. So I wouldn't be in drawdown for too long, and I wouldn't be hitting my stop loss quite yet. If this were to close under that fair value gap, then it'd be a problem, and I would mentally close out. Okay, so that's one fair value gap. Okay, what about the 1 minute? Because we need to go down to the lower time frame because we could always miss something. You never know. We could always miss something. So inside this 3 minute fair value gap, what is there? I noticed that there's another 1 minute fair value gap, which is right here. Okay, so let's go ahead and delete, or actually let's keep this and let's highlight that 1 minute and let's just mark it, I don't know, just fair value gap. Okay, so the 3 minute and the 1 minute are together. Now, when remember when we went on the 3 minute and we, oh my god, it's fucking shit. I hate it. Swing low to that swing high. Where was the OT in? Where was the confluence mostly in? As you can see, the gray, the 3 minute lined up almost perfectly with that wick high. So to me, the 3 minute fair value gap was going to be just a tad bit stronger. And that's what I would base off my consequent encroachment. As you can see, price almost hit that OT. And this is another confluence why I have started to switch my strategy and my entry strategy just a little bit. Because if I didn't do this, let's say I had this. Let's just say I had this. Would it have worked out? No. Because it never hit the OT, so I would have never gone in. Right? But I drew the 3 minute fair value gap. Went back to the 5 minute. Is there anything on the 5 minute? Let's see. What is this? Okay. Yeah. 5 minute. What does this have on the 5 minute? Look, fair value gap here. Now, is this valid? Yes and no. Why? Because this fair value gap is above the OTE lines and everything. It's above the range that we're even looking for. It's completely out of the range we're looking to enter. We're looking to enter not right under the premium or under the discount. We're looking to enter in this range. Let me just draw it out for you if you guys don't understand. Oh, wait, the fuck? In this range. That's what we're looking for. 5 minute doesn't offer that. 3 minute, yes, it does. 3 minute, okay, where the fuck are we? Okay. 3 minute does offers that. Because of what? Because of this fair value gap. And I have experience, and experience will beat the strategy every single time. When you have that 930 open under that high time frame PD array, that high time frame sell side liquidity, it's almost well, this was actually also a quarterly theory, time-based trade. There was accumulation. It broke under the accumulation lows. So manipulated price to go short, and then went long. And so if it wants to go even longer, then it has to create some kind of imbalance. And an imbalance is created here. On the 3 minute, you can see it's I don't want to explain it. It's perfect. It's like, it's meant to be. It's meant to be. Okay? So yes, is this pitch perfect? No. But when you go to the 1 minute, oh my goodness, bro. When you go to the 1 minute and you look at the zone here, yes, yes, this low works, and I would have liked to see this get hit. Okay, but the unfortunate part is that it just wasn't. You could still enter it off the consequent encroachment. Don't get me wrong. You could use that 1 minute fair value gap, but to me, the 3 minute and the consequent encroachment of that 3 minute was just a bit closer to that range, and it was more kind of inside. Because look, When we delete that 3 minute, look where's the 1 minute. So this is the 1 minute fair value gap. Where's that consequent encroachment? So where's our entry? It's completely out of the zone, completely out of the zone, completely out of the range. But if we have the 3 minute, now it's in our range. Okay. So even without the OT, we could still do this because I'd have my mean threshold. So almost got to that swing, or that little high right there. Not a big deal because we're entering off the consequent encroachment. So that's fine. So when we enter, we have like a limit order, whatever you want to call it, strike price. That's where we want to enter or target. The first thing you should set is not take profits. It should be your stop loss, right? Because risk management is the better deal of trading. Where's the risk? Now, personally, I used to do something like this. I used to put it like that. I mean, just look at that. If that wick came down, because what if this wick didn't close in time and it came down even more? I would have gone stopped out, and that's dumb. If you have your stop loss like this, knowing damn well that you're targeting 2.5, that's a little dumb. I'm gonna call you out on that one. And I was dumb. Yes, I was, but this is dumb. You're asking to be taken out, basically. You want to give it some leg room. You want to give it some leeway, or whatever you want to call it, right? So how do you find that? Usually I set my stop loss on the 5 minute because that's usually where some of the lows are created and they're more seen. So as you can see here, where's the nearest low? It's that one automatically. So my stop loss automatically, boom, goes straight to that. I don't even care. See that swing low though, the reason why I have it here is it's the same level. Like, let's just be honest. It's basically the same. It's literally less than half a tick away. Okay. It's literally the same level. The reason why I have this is just because I want to make sure that I'm out the market before it hits that swing low. And because if it did want to pursue all the way through, it would just completely run my shit anyways. So I'd rather have it down here than, a tick lower. It really doesn't matter. But anywhere in this area is fine, right? Obviously. And you can always check, right? Does the 3 minute line up with that? Yeah, I mean, there's a low there. That low, yeah, it's the same low. Now for take profits, let's go and look. So obviously, the standard deviation shows the -1. Okay. I'm looking for. I'm wondering if there's like a. So that's the 0, but is there like a negative? Oh, no, I don't want this one. Like negative 0.5. Is that a thing? Oh, right there. Yeah. Okay. Fine. Okay. So right here, if we were to target 0.5, we theoretically here we would be risk free, because by the time we enter this and we take profit here, we'd be risk free because we take profit here. And if it come down to break even, we'd still still make profit. And that's something I just learned. I kid you not. I thought break even was you're targeting like your highest thing. Like I didn't know that you were supposed to take profits here and there. Like I just thought you were targeting your highest take profit, and that's like the whole position's in there. But a couple months back, I learned about the runners you can leave. You don't have to have a huge position to win. So it's not always like a $10,000 in a position. It could simply just be $10. And if that $10 makes you $2 in that move and it comes back to break even, well, buddy, you just made $2. That's that simple. Although you got to be on your game, because if that break even comes to break even and you're out there and you don't have a limit order or your stop order and it breaks your shit, you might end up negative. Yes, that happened. That happened to me. So be aware. I'm pretty sure like break even is just like if you're 1-to-1. So don't get me wrong, I'm pretty sure 1-to-1 is like this, right? So once you enter here, obviously your contract is probably getting filled here. So I would say just to make sure, probably something like this, maybe 1-to-2. 2 might be okay. Something like this. Contract gets filled here, you get filled up there. That's your take profit. Right here, right just on this trade, you are risk free. for that first candle right there that broke through. That's it. And then you target all that. First trade, obviously, or first take profit, -1, gets hit on that wick. -1.5. I did have this as, whoop, why did it go up? There you go. I did have this as a limit order on TradingView, but I wouldn't usually do that because that's not really a level that I would be targeting. It's also not even a level of liquidity. There is some here. As you can see, it did have an impact on, just look, it did have an impact on here with the standard deviation, but it didn't, there's nothing here indicating anything. So there's no point to target it. Then there's a tough decision. Which of these levels would you end up targeting? Would you end up targeting the -2 to be safer, on the safer side, the -2.5 to be a little more aggressive just to get up to there, or the -2.5, which is like it could and could not hit? Like this is like the full, like if the price is aggressive and you know it's going up, or my bad. If price is aggressive, your bias is correct, and price action is showing every sign of PD ray and everything to go your way, and the trend is high and everything is going good, then target that 2.5. But to be less risky while being risky, you want to target the halfway of that area. Okay. If you were to be super risky and just fuck everything up, go for the -4. I mean, go for it. But I like to target right here, halfway through. And as you can see, what ends up happening? Please, what ends up happening? It reverses because of that order block, not standard deviation. But usually, if I were just to do this, if I were to do my standard, like even if I didn't have that that order block set right here, I would do something like this. I would have it where I do this. That's what I would draw. Boom. Look how it hit. I mean, if any beginner trader saw that, he would be like, how the hell did you get that level? Like if I personally deleted that standard deviation, look at this. So you're saying I just got a random box out of nowhere and I knew exactly where market was going to reverse? How is that possible? Standard deviation. Boom. There you are. Another thing you could do is you could leave a runner. So that's what I've been trying to do, but I don't have enough contracts. Leaving a runner means that you're all out of your main positions, and the runner is like a few dollars left that you have left in your position, that last contract that you don't really care about making money. So the only thing with the runner is you'll always be in profit, because what you want to be doing is every time you hit take profit, your break even goes up, right? So let's say we're almost about to hit 2.5. So my break even should be at -1 now, right? And break even looks something like this. So that means that even if we don't hit the -1, I'll be in profit from that -1. So boom. Oh, we're getting there. And if I don't manually take out profit, because I know maybe something's happening, I would take profit manually. But if I'm not there to do that, it would come back down to -1 and come back to break even. But I'd already have all that position already filled with the market. And so I'd be good. So that's break even and I'm good. So theoretically, if your break even was now, oops. Why is this fucking me up? If your break even was now, your target is here and your break even is now -2.5 here, you notice that right away you'd get out. You'd be out. Or you're my bad. That's my fault. How the fuck is it doing this? Your break even would be a -2 or 1.5, right? Whichever you like, or in the middle. Maybe the middle here, because that works better for you. And you can see you hit that take profit right here, you leave that runner, or if, let's say, because I'm pretty sure I did have this on my chart, I said that, oh, if this goes higher for my runner, right, there's this like fair value gap here that I'm looking for this to reject. As you can see, it did reject for a second and then it came crashing through. So maybe your runner is actually, or your break even is maybe like the end of this fair value gap, right? That right there is your break even, and your target is again that -4. That to be honest is a realistic for break even, right? Does that make sense? Like the moment you hit that negative 2.5, you take profit, you got the profit for your whole position. And now for a runner, you won't lose any money. You just won't gain any more profit, if that makes sense. Or you won't gain, I hope that makes sense. All right. If that made sense, please comment. If that didn't make sense, please comment. If you guys are willing or willing to learn and want to learn more about how I do this, maybe even see me do live call outs, I wouldn't recommend it right now, but if you guys maybe in the future want to see me live trade, I would recommend joining the Discord. I know it sounds corny as fuck, but that's the only place I can share my thoughts, and where other people right now are sharing their thoughts and their trade ideas. That's really the only place we have to do that. And the only way to promote it is through these videos, through TikTok, through Twitter, through YouTube. So please, if you're at the end of the video, just do me a favor, do yourself a favor, go ahead and join. Go ahead and join right now. It's if you just click my profile or my profile, click my profile, go to the links and go check it out. All right, I'll see you guys in the next one.